Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us today are Vineeta Sharma of Narnolia Financial Advisors, Samir Kalra of Target Investing, and T.S. Harrier of HRBV Client Solution. He may join a little late, he's delayed. But on the show today, we discuss ICICI Bank results. They were mixed bag. Profits missed estimates while the asset quality improved. We ask our analyst whether it remains the top private banking pick at the current level. We also discuss Bharti Airtel, which delivered a surprise net profit in the fourth quarter, aided by one-off. But however, if you're looking at it, the bigger takeaway is that the India mobile revenue grew at the highest pace in the past 3 years. Is Bharti the best placed currently to tackle Jio? However, no information was given as far as the rights issue was concerned because of other factors. ARPUs and all were not given. Results of consumption-based stocks have flattered to deceive this quarter. As for Marico is concerned, that had a fairly decent quarter. We asked the analyst whether this is a cause for concern given the lofty valuations that they trade at. And finally, we asked the analyst to discuss one stock that they believe that surprised them as far as the fourth quarter earnings is concerned. But let's start with the big one, and that is ICICI Bank. Started off well, it moved up almost close to 1% and now pretty much trading at the day's low. It's managed to move into the red. What's the view for ICICI Bank? Is it the top private sector pick? Because a lot of analysts of late have started moving their positions from other banks to ICICI Bank, given the big rally that we've seen and improvement as far as the new management is concerned. But Samir, what did you make of ICICI Bank's numbers firstly?
So I think it's a neutral to, let's say, a slightly positive view. If you see the matrix, if you remove the provisions and if you see the core business growth and all, they have really picked up from where the new management kicked in. So I think that is giving consistency to the numbers now, at least on the NIMs and the loan growth area. And I think now the retail focus is coming into the numbers. So that is helping them out. If you see on the other side, the legacy issue of the corporate book is still pending. So I think they have around 12,000 to 15,000 on a double B and below. So that will be a worry. Provisions have come in higher. That means watch lists somewhere have increased. And how sufficient is that for a kind of a provisions? I think as the downgrades are kicking in, especially on the NBFC side and the infra side, I see more risk coming in further. And these kind of valuations, because of the run-up of the new management and couple of good quarters, I think now reaches to a stabilization. So I wouldn't say it's a new buy. It's a hold maybe as of now for me.
Oh, what are you telling your clients in terms of private sector banks? Where should they put their money in? Because I think most of the private sector banks, apart from an IndusInd, have come out with numbers. What's the sense that you got on seeing all these banking numbers, and which remains the top pick?
So I think for me the top pick has been HDFC Bank, and that remains that top pick at least for now. Because if you see the performance, that's a consistency which that kind of a high valuation requires to sustain. And I think over there rest of private banks are still into nascent stage. We had bought a Yes Bank at 170 levels. We sold off at the peak. And again we have started nibbling in, but we are not nibbling in too quickly. And I'll give another couple of quarters before this ILFS and other double B grade issues get resolved or see a more to higher provisions.
Okay, so that's the view that's coming in. Vineeta, what have you told your clients post the ICICI Bank numbers?
So we are having a buy rating on ICICI Bank, and as regards the results that have come, so it was pretty in line with the expectations. Just provision has gone a little bit higher, and that is also on account of one of sugar account that the management had explained, and that was more of a regulatory. I think that should not be too big a concern for the management going forward. Secondly, the advances growth for ICICI Bank has been growing very well. So if we look at the last 2 years and this year around, so in the present quarter also they have given a advance growth of around 14.5%, and they were reporting around less than around 5% or so. Before that, advances were degrowing. So basic business from the from the base is seen to be growing up. NII growth was pretty good. It was 26%. And also the BB and below rated portfolio, that has gone down, and it is around 3% right now, which was 3.3% last quarter. So overall we are able to see that the company is moving towards the better profile assets, and I think that should give a impetus to the bottom line also going forward.
Have you all changed your targets? Because what I saw was across the board that a lot of brokerages have raised the target. Have you all kept it same? What's the target that you all have?
So right now we have 515 as the target for ICICI Bank, and in fact that is around 20-25% up from the current prices that the company is trading.
And what's the sense that you tell your clients when they ask you about private sector banks? Like I asked Samir, except for an IndusInd, most of the private sector banks have come out with numbers. What did you feel seeing these numbers? What's the pecking order that you've told your clients in private sector banks?
So private sector banks, or let's say the corporate lenders, we are positive on the corporate lenders since I think last 3-4 quarters, and we are expecting that going forward we'll see good amount of growth in the bottom line for these, because most of the companies are now changing their stance. They're going to better rated portfolios, and so from the base level also we are seeing good amount of better quality asset where they are pitching in. Secondly, already the provisions for these companies are already higher. So, and even say for instance HDFC Bank, which was riding on the growth of retail assets, they have also now in their current con call they have shown their interest in the corporate side of lending, and I would say HDFC Bank is the first one which had entered the retail phase, and now they are the ones they're changing their stand and coming to. I think all the corporate lenders, they should witness good growth going forward. From our side, we're liking ICICI Bank definitely, HDFC Bank though not properly in that criteria, HDFC as well as SBI.
Okay, that's the view that's coming in on the private sector banks, especially ICICI numbers. The second number that we want to discuss is Bharti Airtel. Now a couple of things that came out. First of all, a lot of disclosures didn't come out, the ARPUs, what exactly the other minuscule details were, and that was on account of the ongoing rights issue. So probably in the next 2 weeks, probably we will have more data on how the ARPUs have fared out. But surprisingly, despite strong set of numbers, the counter is down over 2% in trade. So we'll ask our guest what they made of the numbers and what's the way ahead. Vineeta, what's the call that you all have told your clients on Bharti Airtel?
So Bharti is not very, we're not tracking it on a very regular basis, but overall because a lot of clients have in their portfolio. So it's like, this time around the top line has come out well. Even the bottom line, there was one-off item. Apart from that, adjusted profits, adjusted losses are also way ahead than what the analysts were expecting. Our sense is that, because the kind of the investment that they had done in Africa, I think that is seen to be getting stable, because this time also the top line from the Africa business was stable. EBITDA had grown around 6%, 6-odd percent EBITDA had also grown. Plus, if you look at from the business side of it, we are seeing that Reliance is one. So it's a 3-player right now only, and with Reliance Jio, I think the kind of competition that both the companies have faced on the pricing front, I think that should settle down going forward. Also, Reliance will need to make Reliance Jio, they'll be more concentrated in getting a more cash flow kind of a business, because now they are foraying into the retail space also. They are planning to launch e-commerce. So I think, their concentration will not be on the cutting of ARPUs, and that will not be their concentration. And I think the market is going to get more stable than it has, the companies have witnessed in the past 2 years. So from that point of view, I think Bharti can be a better bet. The debt in the books is also expected to reduce with the right issue, also the Africa business. I think all in all, we have a positive view on Bharti.
Okay, and do you all have a positive view on the telecom space as such? Do you believe that the worst is over?
Oh, there is only very few players in the telecoms, and since we are not covering Bharti, so we don't have a very clear view on each of the companies, and as such we are liking Reliance.
Okay, that's the view coming. Samir, what's your sense on Bharti numbers? A lot of data is not missing, but from what you read and what you made out, what did you make out?
So I think ARPUs somewhere have improved. It can be only estimated because of the numbers of additions they've done were not around the, let's say, subscriber additions were very low, and this kind of a growth on quarter gives you more movement on the ARPUs coming a bit better than what people estimated. But if you see, the concern is that in last 1 year they've done an exceptional gain of 4,600 crores, and even after that they have only come out with a 400 crores net PAT for the full year. Their debt has increased on the working capital from around 15,000 to 30,000 crores. So the systematic issue is ARPUs improving, yes, but the cash flow improvement is second most, I think, important factor for this whole sector. And I think over there the fight is still not, people expect Jio to reverse the strategy, but I don't see that happening anytime sooner till the time they garner what market share they have targeted for. So, and that can be somewhere around being the largest player. Bharti will have another second round of fights when Jio launches the fiber game. So they have another pressure coming to them. So whatever they garner in the rights issue or the IPO through Africa, if they plan to, I think that will again hit the fiber assets for Bharti and the revenues over there. So Bharti has two fights to run. They are already running on the telecom and on the mobile end. Now they'll enter the fiber end fight. So I think valuations over there, if you see everything, I think is a little up from what it's supposed to be. I think another 10 to 15% kind of downside justifies that kind of a valuation.
Okay, you said that the ARPUs were higher. What kind of estimates have you built in? I think the street was anticipating close to 120.
Yeah.
What's the number that you have?
So I think they've come around 121.3, if I'm according to whatever I could calculate on. So I see that kind of a a slight improvement, because what is happening first is your subscription addition monthly has to arrest or improve. So that is happening in Bharti. Second, the pricing somewhere only reflects into your revenue. So that quarter-on-quarter growth, which was 4.7, that has helped them into a better plan. So I think even for them, postpaid works better than Vodafone.
Okay, and finally, among your clients' portfolios, how have you taken exposure to telecom? Do you have exposure?
So telecom is via Reliance, and otherwise we have a hold on Idea. We have even oversubscribed in the rights issue, and I feel over there these are better places to get exposed, because if Reliance Jio at any point reverses, Idea doesn't have to deal with the fiber fight, which Bharti has to, and the valuations have really gone suppressed because of the debt issues and all, which they'll resolve in, I think, next 6 to 9 months.
Okay, that's the view that's coming in on Bharti Airtel. The other space that is of a lot of interest is the consumption theme. Most of the companies, including the big one HUL, came out with numbers which were not the most impressive. Today, most of them seem to be bouncing back in trade, but the volume picture, the numbers especially, most of them were concerning. The only exception probably will be Marico, which came out with numbers yesterday, which did better than the peers, and the Morgan Stanley upgrade really got the counter firing up in today's trade. It's up almost 7%. Samir, I'll start with you. Are you concerned with the numbers that you've seen on the FMCG side?
So I was concerned last quarter as well, but that didn't reflect in numbers. Because what was happening that past 2 years or past 8 or 9 quarters, you were having the benefit of demonetization, GST adjustment at the distributor end. So you gained market share at the distributor end. and national chains were able to fill more at the distributor level than they were supposed to on a normal basis. Now you're returning to a normal growth phase, which in the volume terms you are supposed to have in 2015-16. Now, if you see 5-year average, the whole sector is trading at 30 to 35% kind of a premium. So I think that kind of a premium has to suppress. And when you return to normal level growth, for HUL if you see 7% is a normal rate of growth. What you got 10%, 14%, 15% was abnormal. So that time the valuations were going up. Now if you're returning to I think the normal 7% or 6% or 8% also, I think the valuations have to subside. So I think another quarter and these valuations will really subside. And I think people will start finding exits at every bounces. Somewhere what we were talking about in the auto sector, these bounces were helpful in getting out. I think similar pattern is happening over here now.
Okay, in the FMCG space, so where do you have exposure, and recently which are the stocks that you all have exited?
So we've exited HUL, we've exited Dabur. We had exposure to these only. Otherwise, whatever consumer names, as in if you mean discretionary or auto or anything else, we are almost underweight now.
And what's the highest weightage that you have on the FMCG side? Which stock are you all most bullish on?
So if you see the rating wise, we were always highest bullish on Dabur. So that's where it went to 5 to 6% at a point of time. So now it's almost 1 or 2%.
Okay, that's the view that's coming in. Vineeta, what did you make? Are you concerned with the slowdown that we've seen, or do you think that we will be able to tide over this?
So, as Samir said, that now all the companies will now, settle down to the nominal growth, nominal growth of in most of the domestic volumes. Plus, if we look at the valuations and if we think that, okay, we need to exit from this space, but then there should be some other industry or sector which should be the flag bearer in terms of, good growth. Till now, for the past 2 years, we have seen consumption-led growth, even from the government side. And now, whosoever the new government will come, they'll try to push in more of, they'll have to push in capex, infra-related growth. And in case if the capex already is now at 74%, the capacity utilization is around 74%, and if it gets to 80, 85, we'll have a fresh round of infra boom coming in the industry. But then only if these series of events happen will I think that the valuation for FMCG will contract. As regards the volume concerns that we are talking about, definitely we do not see very high volume growth going forward, and because of the joblessness, rural wage inflation, everything. So the overall volume growth is not that we are expecting. One change that can happen is most of these companies are now getting into widening of their retail distribution, as well as there are a lot of category growth in terms of new products, as well as the growth of the premium products is the baseline for these companies, and I think that company will be able to survive or will do better once a retail distribution arm that they have set in mind should be broad based, as well as the volume growth on the category sides come.
Okay, and what's the top buy you all have, and what's the top sell you have on the consumption space?
So top buys we have, I think we liking Britannia because we have already seen in the past the way they have increased the EBITDA margin and translated the gross margins also into EBITDA margin. Now they're spreading on their distribution arm. They have good products in line. They all are till date Britannia was talking about premium products, but we had not seen them getting proper traction in the market. Now we have products in the market, and we hope that these new categories of products that are coming should catch up. They have a new plant, their R&D center is doing well. They have new plant which are, croissant, cakes, all these products. I think that will be the next move where the top line growth should come. So the Britannia is our top pick in the FMCG space.
Okay, Hari, we were discussing the slowdown in consumption. Are you concerned with the numbers that you've seen in companies that have come out with numbers yet?
See, prima facie, yes, but what we understand is that this is largely to do with the slowdown in the rural sector, because if you look at specifics of cases like Hindustan Unilever or Britannia, to an extent Godrej Consumer, I think the slowdown has basically come from the rural segment, and that is more because of obvious reasons. I think there has been farm distress, there has been a liquidity shortfall in the last 6 or 7 months, so all that has been contributed. We would believe that this entire rural slowdown is probably a temporary phenomenon. Maybe give them 6 months, 1 year down the line, I think the thing should be much better. We would be really worried if the growth becomes flat, because that is not the case. Probably from 10% the growth has come to about 6-7%, and I think if they can sustain that for the next 2 or 3 quarters, we would be too worried. The only issue on consumption has been valuations. I think for a kind of a top line growth of 7-8% and a bottom line growth of 15%, I think 40-50 times valuations were little steep. So that is probably getting corrected to more rational levels. But otherwise, I don't think we're really worried about the consumption stocks.
Okay, and what are the big? What have you told your clients in terms of to accumulate in the FMCG space, and which stocks have you told them to exit?
No, we have actually asked them to be a little wary of Hindustan Unilever at higher levels, because the stock has rallied substantially, and I think they're going to have headwinds as we go ahead. We like Nestlé because I think it has a very, very strong franchise in the food business. The worst of the Maggi fiasco is behind them, and I think the company has been showing good numbers quarter on quarter. So Nestlé is clearly a buy for us, and Hindustan Unilever, we've been asking people to size down their positions.
Okay, that's the view that's coming in on the FMCG space. And the final segment we want to talk about is the earnings. We're in the midst of the earnings season, so we're asking our guest whether they found any result which was very, very surprising. Could be on the higher side, could be on the downside. So Hari, I'll start with you. Any result that in the midst of earnings season, any result that you were very surprised to see, and you believe that this traction will continue?
See, I think TCS was one positive surprise. If you look at the overall, in terms of the margins, they reported improvement in the operating margins. There was also a slight improvement in the attrition rate as far as TCS is concerned. They have sustained growth, I think, which was something people are expecting, that the growth rate could slightly falter. But I think to that extent, TCS would probably be one company that has surprised on the upside. I thought Godrej Consumer was a stock that actually surprised a little bit on the downside. While the rural stress was definitely there, I think there has been a clear pressure with the top line falling to about 4.5% growth. So I think that is probably one stock that I would say disappointed a little bit at the downside.
Okay, what about you, Vineeta? Which stock are we talking about?
So we liked Ultratech because earlier in the last quarter also a lot of negativity had built up with Ultratech, and if we see this time around, the volume growth has been pretty well. It is 14% year on year. Top line growth, bottom line growth has been good for Ultratech. Plus, as we had talked earlier also, so merger of 2-3 companies and getting the whole balance sheet in shape, and now Ultratech is a big company. Getting all those balance sheet in shape, it definitely takes and costs some time. And I think with the onset of this quarter, the balance sheet issues should get resolved in that manner. Merger and synergy should be going forward, should be witnessed. Also, if we assume that the capex related growth will be the next thing that we will talk about, in that case cement is one industry that should be the clear-cut beneficiary going ahead. So I think it's a good bet because the margins have also improved, and it will be more or less in a check by the management. Volume growth will still be there. So I think Ultratech was one good. Most of the companies that we saw, there were around 50 companies that have already come up with results that we were tracking. 5 of them were below estimate, some 4 of them were above estimate, like Yes Bank or was below estimate, then Tata Metally and even Ultratech was above estimate, ACC was below estimate. So there has been a little bit of mixed bag. Most of them are most of them are in line with expectation. Top line around 200 companies that we've seen right now, 200 plus companies. Top line is around 9% year on year ex financial, and the EBITDA is around 6%. So and still we are seeing high caps are doing better than the mid caps in terms of profitability.
Okay, that's the view. And Samir, which stock did you feel that company you felt that surprised with earnings?
So I think recently Federal Bank was one which surprised me positively. Though I didn't expect such an improvement in slippages or provisions. If you see provisions, corporate side slippages went to 0. And that being a highly concentrated bank to certain amount of corporates, that is, I think, a very positive sign. And if that continues for another quarter, then you might see valuations getting a kick up. The ROA went to above 1%, which has happened for the first time in the bank history. And if you compare other metrics, that has gone back to 2017 levels, FY 2017, which is almost the peak valuations which it was trading at, and before the floods and everything impacted their books. So I think another good quarter and you might see a bump up in Federal Reserve.
Okay, that's the view that's coming in on the stocks that were surprised the street, counters like Ultratech, TCS as well as Federal Bank. But with that, we completely timed out on today's edition of Hot Money. Many thanks for all my guests coming in. Samir, TS, Vineeta, thank you so much for coming in. Ask PQ comes up next. Stay tuned to Bloomberg Quint.